anyone who wasn't able to join the call to get the content. I'm Mary Ann Dersh. I have a company called Courageous Communication. I help nonprofits connect with influence so they can create more income and impact. I am the part of this, the financial side I'm on is just really helping nonprofits market themselves to connect with new donors. But Keith is my colleague. I'm in a coaching group, and Keith is part of that coaching group for people from all over the country. We are entrepreneurs from all over the country who are part of a group led by our business coach. And our companies are run really basic. All our companies are about really helping people and helping the community. And that's what Keith has been doing for a long time. I'm going to let him introduce himself. But first, I would like to just kind of go around. If anybody would want to put themselves on video, I certainly would appreciate it. For two reasons. One, it creates connection and community because this is a time where we just need to see faces, all of them, please. Everyone's face. And second, part of what we're going to do here is create some connection and community. I have contacts from all over the country. I do want to give one caveat. I have 3 teenagers here right now, so so I know everyone's. If there's not a kid or a dog in the conference call, I don't think we really had one. So, right. So just everyone grace and ease as we move through this. So what I'd like to do is just kind of unmute people and give me a quick intro, who you are, who you're with, and kind of like what brought you to the table today. And Pat, I'm going to start with you because you're already unmuted.
Hey, Marianne, thanks for coordinating this. I am Pat Norley Jordan. I'm the principal and founder of PKJ Consulting. I work with nonprofits on capacity building. And the reason what brought me here was clearly just to get the details, because there's a lot of information out there. There's some rumors out there that nonprofits are being put at the back of the bus. So I'm just curious, just want to make sure I have the best information for my clients. You just muted yourself.
Thank you. That this situation is so fluid that,
right.
You know, he's going to give you everything he can, you know, up until this moment in time, which is really kind of like a good metaphor for how we all can be living, which is just, you know, this moment in time. Okay, thank you, Pat. All right, Melissa Jones, why don't you go ahead? I'm going to unmute you. Give me just a really quick who you're with, where you're from, and why you're here.
Oh, thank you, Marianne. Yeah,
Hi, Melissa. Mm-hmm.
Hi. Thanks so much. I am Melissa Jones. I have been living in Boston since September. I'm a St. Louisan, but moved to Boston with my youngest child. She was studying at Boston Ballet School. Thought we'd be there 2 to 3 years, but it turns out we're coming back this summer. So I am back with the pandemic. We'll go back to Boston, come back. But at any rate, I've worked in nonprofit world all my life. Absolutely love it. Saw, of course, the CARES Act and have been curious about it, volunteering with some different organizations now, and just want to get some good information to share with them so that they feel comfortable and confident with it and moving forward in their messaging. So thanks for organizing this.
Thank you. Okay, Christine, why don't you go ahead? I'm going to unmute you. You can unmute yourself. There we go.
Thanks, Marianne. I'm Christine Rutherford. I'm with Karen Counseling, and we are just looking for more information about the CARES Act. We're already going to be doing the payroll loan type funding, and we're also looking at the other one. So I'm just trying to gather information for our organization. So thanks for having this.
Thank you. Thank you for your... Christine, like, is a high-level participant in things I create. Okay, Jim, I'm going to go with you if that's okay.
Okay, that's good. Can you hear me?
Uh-huh.
Marianne, my name is Jim Raftery. I'm a partner in Haney & Company. I was invited by Michelle Nagy from Haney. We merged with Haney & Company in November. Prior to that, I had a practice of my own for 40 years, and our primary focus is nonprofit audits of nonprofit organizations. So we have about 50 nonprofit organizations that have a lot of questions, both about the PPP and the EIDL, and I'm interested to hear what you have to say.
Awesome. Okay, and I have Raphael. I'm gonna unmute you if you want to do a quick intro. Nope. Okay. I have a Bushra. I hope I'm saying that right. I'll unmute you if you would like to do a quick intro. Oh, all right. Anyone else want to do a quick intro? Raise your hand in the chat. I think I got everyone. Okay. So Keith, I'm going to turn it over to you to go ahead and start with the content.
Sure. Everyone, can everyone see my screen? All good? Okay, so welcome everybody. My colleague Jenny Chakran, you see the First Horizon banner up there, was scheduled to join us, and I hope she still will be able to pop in. As Marianne mentioned at the top of the program, everything is so dynamic in this world right now that even she is burning the midnight oil, and she alerted me that she was getting an update from her senior management that she had to be on that call. So she and I went over most of this content together, so it reflects her input. And then, but I wanted to say, you know, this is a very dynamic situation and things are changing daily. So I'll give you, my purpose of this call is to give you some information, but it's also to give you a bit of insights and thoughts and ideas based upon my experience so far in helping a wide variety of clients. And then also what I'm hearing from my contacts at the SBA South Florida office, as well as my banker contacts, and you know, what are their insights, what's the experiencing, what are the best tips and insights we can give you at this time based on what we know. So for recording and archival purposes, everything I'm sharing with you is my best thinking as of right now, and much of that can change tomorrow. So I'm encouraging you to just be in contact principally with your banker, wherever you have your bank deposits. That's the most critical thing. And then I'll give you a couple of websites that are critical for you to keep updated for anything that is an official edict or an official announcement or official update to the programs. All right. So I'm going to just go dive right in. So I'm Keith Kohler. My company is K2 Financing, and I serve as a debt strategist to a number of companies throughout the country. I specialize in food and beverage, CPG, and manufacturing, and I'm a frequent speaker or panelist, and I work with a number of entrepreneurs as they grow their business. So you can connect with me on LinkedIn at the top. That's my profile, Keith Kohler 1. And for email purposes, I have a special one called Assessment at K2 Financing. Jenny, again, I hope she comes along, but if not, this is how you can connect with her. She's very open to connecting. And certainly I'll tell you that whatever questions we talk about tonight, if I can't answer them fully, we'll make sure, Marianne, that we collect them and that we find a way to get them answered for you, probably within 24 hours, okay? So what's going on in the lending landscape today? And probably all of you have been in touch either for yourself, for your clients. I've heard many of you are consultants working with a large portfolio, or maybe even for other businesses, for-profit businesses. You're talking to your lenders and you're understanding what's going on. And you know, these are difficult times. Of course, they're unprecedented. And as a result, some lenders are being quite risk averse and they're not lending at all. They have moratoriums on lending and we're not sure when they might come back. Many have stopped taking new applications. And of course that makes sense because everybody's focused on these particular disaster loan assistance programs. But that is still true that the traditional SBA programs, some of you have seen 7A, 504 Express, mainly in the for-profit world, but some of you may have had experience with that in the not-for-profit world as well. Essential industries versus those that are shut down. You know, these SBA programs were meant for those really going through hard times where they either had to have full interruption or some level of disruption, which these are undefined terms. And the most important thing I can tell you is you know, your situation may vary, right? We've heard that trite phrase many times, but economic injury and disruption means something unique to all of you and for your particular not-for-profits or for-profit businesses that you may be working with. Okay, so what can you do right now? In all the trainings that I've been a part of, what is important for you to know is think about these different loan programs in the timeframes that they address. The PPP, the Payroll Protection Plan, is asking you, what can I do for you in Q2? What's going on from April 1st, which is just passed, through June 30th, 2020? Because that's what the time frame that it addresses. The opportunity in the EIDL, which we'll get to, is I'm asking you to think about 12 months ahead. So no one has a perfect crystal ball, but boy, we need them to work right now, don't we? So take a look at April 1st through March 31st, 2021 to think about how that's impacting you or the clients that you work with. So what you can do right now is, even though income tax or 990 extensions, you know, everything's gone off to pretty much July 15th, right? However, if you haven't organized your files through the end of 2019, you really must do that right now. You have to have your end of year done and ready to go, because you're going to need it to make your requests for either your loan size amounts or providing supporting materials. To the degree that you can finalize March and close it, please do that. If you've not finalized March, hopefully you have February, because again, many institutions are asking for what we call interim financials, something during the period in 2020. If your 2019 990 is not filed, then make sure you have good knowledge of whatever you filed in 2018. Lending in general works on documents that are filed, okay? So whatever the most recent year filed is, that's the base case for underwriting and taking a look at where you are. I'm asking you to please keep a detailed record of what I'm calling economic injury. And you'll see that, unfortunately, throughout the presentation, several items will have quotation marks in them, and that's because it's not a defined term. It's not perfectly defined. It's how you define it. And what I'm asking you to do in the opportunity is you to take control to define what that means for you, so that you're the most successful in what you're entitled to receive in these loan programs and what you're going to ask for versus someone else making you an offer. Okay? So what can you do right now? Even more emphatically than what you can do now, these are some things I'm asking you to consider. And that's that if you were already working on some type of lending, you should finish it as soon as you can. Because, and if your organization did quite well in 2019, if you would have already qualified for lending, pursue it and close it as fast as you can, okay? If you haven't reached out to your bankers, and, you know, I think, was it one of the ladies said that, hey, I'm concerned that not-for-profits are going to the bottom of the heap. And I'm going to tell you, in my experience, I'm hearing, yes, that's true in some cases, and in others, that's not true. So much of it depends on the quality of your relationship with your banker and with your institution. Have you been someone that knows who this person is? Have you established a personal rapport? Really, the strength of your relationships, as much as your value to the bank, is winding up playing an important role. So if you have no relationship with your banker, please, you know, find a way to get that relationship established as fast as you can in light of all that they're doing. I'm also looking, you know, investors is of course the term for the for-profit entity, but hopefully you've talked to your major donors. You've spoken also to people that would otherwise giving you grants. Are they continuing to fund and exercise on their grants? Are they continue to provide donations? We all need to know where they are and what they can do for us over the next year. Are they going to be there for us as sources of funding or support or other types of benefits? Okay. You know, for-profit or not-for-profit, you still are buying from people. You have vendors and suppliers, and some of you have customers. Do you understand where they're at? And will you continue to be supplied with the goods and services that you need? And importantly, I'm asking you to think about, where are the favors you can call in if you need them, right? Do you have that major donor on the sideline that can help you get through this period while things get much more normalized? Is it the banker? Is it your bank, a specialty bank in not-for-profit lending, and they want to do more at this time? I'm encouraging you to really think laterally across all the different touch points and sources of funding and support for you. And then, as I mentioned at the top, I'm encouraging you to really, again, look at the time period from April 1st through to March 31st, 2021 for what you'll need and what are the different resources you can use right now. So this is just a quick review of SBA traditional loans. I'm really not going to spend any time on this, but when you go back through the recording or the presentation, you can just remind yourself that these programs are still available. The big news for you is if any of you have lending right now, whether it's SBA or otherwise, the SBA is making 6 months of payments for their customers right now. And I'd encourage you for all your financing sources, everybody is trying to be of service and contribute. So if you have lending, if you have other obligations, please ask them or consider asking, hey, can I pause for 3 months? Can I only pay principal? Can I only pay interest? Maybe there's credit. Any of the sources of financing you have, definitely reach out and see. You know, I myself have a car lease, and I called up the other day and they agreed to defer 3 months of payments and put it on the end of my lease. And I'm just finding that sincerity goes a long way, and just being very clear on what you're asking for. Okay, this is a loan chart. And the funny thing is I got this from one of my commercial banker friends here in South Florida on March 27th, because as you saw, everybody was very rushed to give you information because they kind of wanted to be first. It's like raising your hand first in the classroom because you have the right answer and you want to be called on, right? Well, in this case, particularly with this environment, first didn't always mean best. And it's not because people had bad intentions. It's just because I can assure you that the items on this chart, I've changed them probably 7 times. And the reason I have the yellow highlighted things is just an illustration of how they've changed. Many of you in the Paycheck Protection Program have seen the applications. The current application you have right now is the 4th iteration. Maybe you don't know that, but that's the 4th one that came out. I saw number 1 and number 3 and number 4, and it just makes your head spin. It's also true that if you see this, yes?
Let me ask you a question real quick.
Yep.
How would you know, would they have even seen one of those earlier versions, or is that just something you were privy to?
I've seen it, and well, they may have, because it depends if they've applied it all. If anyone on this call has...
How do you know if you have the latest I guess my question is, how do you know if you have the latest version of anything?
Yeah, I'm going to give you, as I go through this, the one-stop shopping for what's guaranteed to be the latest and greatest. So Treasury.gov, and you'll have it in a minute. Treasury.gov is where you find everything you need right now. And anything else that doesn't agree with that, throw it away. Only go to the Treasury.gov website and rely on that. And the same thing with the EIDL loan, emergency injury disaster loan, or sorry, economic injury disaster loan. All of that is found on COVID SBA relief, and I'll give you that website in a minute, okay? Most important insights that I can share with you is you can apply to all programs. It bears repeating, you can apply to all of these. It's not one or the other. The only thing is you must use the proceeds. You cannot double dip, okay? You must use one proceeds from one loan for one purpose, and they just cannot cross over. And I think it's very clear. And the other thing is, some people, you know, some of my clients reached out to me, oh my God, this is free money, I'm going to take advantage of it. And I said, no, you're not. You're going to leave this money for people who really need it. And I think that's an important thing. If you or any of your clients are doing really well in this environment, you're still thriving as a business, to be very direct, these programs weren't made for you. These were made for the people who either had complete disruption, like many of your retailer friends, your folks in the hospitality industry, or maybe anyone that had to really shut down their programs and services. So I think there is a notion of honor and ethics which needs to be brought up and discussed. And you know, let's help those who need the most help right now. Now, that's not to say that people don't qualify who may need less help, but I'm very fine advocating these programs for them. The most important thing I can share with you, though, is these programs are not meant for growth or expansion. The use of proceeds can only be to handle expenses, and it's meant to retain jobs. What would an example be? Let's say you had a not-for-profit customer that was building a new facility, right? Maybe it's a new preschool attached to a church or something like that. The new preschool building, and they're doing construction, they're buying furniture. No, you can't use the funds for that. That's not for this. Those are for the traditional SBA programs or other lending, okay? Another thing, you've seen this, EIDL is administered by the SBA, PPP is by your bank. Big difference, right? What's the big difference we know? Loan programs are always traditionally administered by banks. This is the first time the SBA is doing the lending. So I think there's an area of experience and insights where EIDL, I really would encourage you to be better prepared and very well documented, because the folks doing the work are less experienced. They're not traditionally credit people or loan underwriters. Although they're being trained, it's just not the same level of experience. The application window is open for PPP. All of you know that. It was April 3rd. However, I highlighted this, but banks cannot yet submit for not-for-profits. I'm sorry Jenny has not joined us, but the key thing I'm saying to you is for-profit companies and the largest companies of banks normally get priority. It's just the way it is. However, if you have a relationship, that you can get into this faster and you're well prepared and you have your documents all together, I'm sure you can still get funding in a relatively short period. Many of my clients who submitted their paperwork on Friday already got their money on Monday, and others are getting it this week. So it is a quick turnaround, but I always say, an incomplete file gets pushed aside. So you're better off getting it right the first time and submitting everything exactly right. I'm calling this your top choice college application all over again, right? So again, I'm hearing different things about not-for-profit having priority or not. Again, check with your local banker. So I'm sorry, Marianne, this didn't paste very cleanly and neatly, but if you really just go as far as treasury.gov, there's a click through at the top, which says, there's a small banner that says COVID-19. Click on that. Everything is right there. Everything you need to know. And if you go on that, there's a menu that talks about information for borrowers. If you focus on that information for borrowers, you download that. It's a 4-page document. Honestly, that's your handy dandy reference guide. It's really all you need. Everything is there that are the most important questions. Now, there's a lot of lack of clarity on how certain questions can be interpreted. And that's been a bit of the bane of my existence since the ruling came out and since the updates have been issued. There's still some questions about how do you calculate payroll or benefits included? Well, wait a minute, what about workers' comp? So still some things to be sorted out. But what I'm encouraging you to do is a two-step or three-step process. One is do it exactly as written first. And then when you have particular exceptions for your organization, keep those files handy so that if something changes in the guidance, you'll be ready with the numbers and you can adjust the amount that you're requesting. Does that make sense? So the base case is do it as told. The second case is color outside the lines, right? And come up with every single case that might make sense for you. Where people are making...
go ahead, Keith.
Okay, where people are making exceptions in particular has to do with what is the period that I'm calculating average payroll. The guidance from the Treasury Department is just calendar year 2019. If some of you added significant headcount or added to your total payroll a lot in the first quarter of 2020 and your number's a lot higher, make sure you have that figure handy so you can make the case. Indeed, what's really weird, and I can't explain it, is the Treasury Department is saying calendar year 2019, but some bankers are looking at trailing 12-month. All right?
Yeah, so before we get into this, I wanted to just make sure we don't have any questions. I don't see any hands raised, but if any, this is just a ton of information, so I'm gonna break open my view here. Does anybody have any questions that they wanna ask or want to put in the chat before we go farther?
Yeah, and I can give you as a preview.
I felt like we just got a lot of content there, so if there's no questions, then we'll keep going.
Yeah, as a preview, what we're just going to go into is details of PPP and EIDL now, okay? And just finish it off. All right?
Give me that thumbs up if you're okay. All right.
Okay.
So here we go.
Thank you, Marianne. So what's going on here on this slide is all of you who have reached out to your bank should be getting a slide which would look something like this. What are the documents needed for them to determine the loan amount? So this was lifted from Jenny's bank's email saying this is what we need to see. So I won't go into this, but you probably, whatever I have here, great, that's a good guidance for you, but you must check with your local bank so that you're you know, it's their ability, it's their way of executing and asking for specific documents. Okay. Additional documents required. This can change a lot by lender. One of the key things I just want to bring up with you is bylaws. For many organizations, I've seen this over the years. Some people don't have bylaws signed, sealed, and delivered, right? Or they've never executed them. Many banks will ask for this because they're going to ask that whoever does the work or is being an agent, submitting the materials or discussing the file, that you're authorized to do it, that you can represent the organization that you're submitting the funding application for. And it's also that you can sign loan documents, right? Whoever is going to, you know, that's an important thing to get ahead, is who within your organization or organizations will be able to sign loan documents and make commitments on behalf of the organizations. All right, loan forgiveness. It's really going to be an event that comes up on June 30th. At June 30th, that's when the determination will be made, reviewing how you use the loan proceeds. Did you use it for everything you said you were going to? And somehow, someone's going to have to verify that that's the truth. And I can't tell you what it is right now. And I don't think a single banker can either. But the idea is that whatever you used it for, and the acceptable use of proceeds are payroll, it's rent, it's mortgage interest, and it's utilities. And you'll just provide either canceled checks or paid invoices or anything that will verify. What I'd strongly encourage you to do is, whoever does the accounting for your organization, whether it's you yourself or someone else, you know, create that separate folder on your desktop, or even print out everything, however you prefer to organize your files. Have it in one safe and secure place, password protect it, keep it only for your eyes only for a few people, to make sure that all these compliance areas are well organized. All right. So that's PPP. All right. For many of you, if you're filling out an application, or if you're looking to fill out an application, there are some confusing elements to it, but you know, just be thorough. I've been, you know, you'll laugh at how things change. Here I was Thursday night, I had all my energy behind me. I filmed an amazing video about how to fill out the application Thursday night. And then my banker friend is like, that's great, Keith, but the application changed. So all that work for nothing, but no, not all for nothing. It's about 80% of it retained the same, but there are some tricky questions there. The key thing just at the top of that form is making sure that you tick the box that says nonprofit, so that everyone recognizes what type of business you are. So moving into EIDL. So EIDL was the first program to come out. It came out a couple of weeks before PPP. Many of you may have already filled out applications for that. Okay. If you haven't, I'm going to skip ahead and come back. This is the website, Marianne, right here. Mm-hmm. For this program, all anybody has to do is fill out this eligibility application first. And that's the first thing. I'll come back in a second. Whoops. Okay, because EIDL is has underwriting and decision-making more in lines with a classic lending environment. Okay, similar underwriting, similar ways of determining what would be the right loan amount for you. So it's about eligibility. You have to declare, you have to warrant and represent that whatever you're applying for was as a result of this specified disaster. It cannot be coronavirus plus a flood, plus a fire. None of those additional issues can be considered in this. My simple rule for defining economic injury is before minus after. Okay, so unfortunately, a very protracted exercise, but one that's going to make sense for you to best determine what economic injury means for you and how to ask for the right amount of money is what would your plan have been before this came along, and what is it going to be now? And that's the difference, and that is a simple rule for what's injury. Okay, what would an example be? You might say, well, between my grants and my donations, maybe I would have had $1 million this year flowing into the organization. But now I think it's going to be more like 500,000, right? Something like that. Before, I was going to hire new people. I was going to have new program managers. I was going to have new products or, programs and services in the community. All of these things were going to happen. Now, I'm cutting back. I'm going to do less. I'm going to do just my essential services. So whatever that, before is minus after, that's the difference. And really the way to measure it at the end of the day is whatever that bottom line number would have been on your 990 form, right? So if prior you felt that that bottom line number was going to be 50,000 and now it's going to be 5,000 or maybe even negative because you have fixed expenses that you must honor, then that's the way to consider this. Credit history is really not relevant to you all because this is not hinging on your personal credit. But if you do have for-profit businesses that you consult for or other friends you want to talk about this to, satisfactory to the SBA was the definition on the training that I was a part of. And of course, that's perfectly vague, right? Satisfactory to the SBA right now usually means a credit score in the low 600s or higher, where personal credit is something. And you have to demonstrate repayment ability. You have to show some ability to repay the loan, whether historically or into the future. An example, Marianne, might be if you're working with an organization that last year on their 2019 990 showed a bottom line number of say $10,000, right? $10,000, if you have that money to apply towards loan payments, believe it or not, that could be a very sizable loan over 30 years, which is the longest permitted term, right? But if in your last filed 990, you're showing a negative number, how can you prove to me that you can repay some additional lending? It could be very challenging, right? For collateral, none is required for loans up to 25,000.
Okay, hey Keith, we have 2 questions in the chat.
Yep. Can you read them to me? Because for some other,
I am.
Oh, here we go.
You're all good. That's what I'm here for. So how long can
Okay.
we wait? Christine's asking, how long can we wait to see how much we will be impacted without risking depletion of funds?
Christine, perfect question. I'm going to give you 2 answers. One is, I believe that the funds will all be deployed, and I do believe that they will be increased. If I'm a betting man, I'm a risk taker, I tend to believe that there'll be a second round of legislation making more funds available. Let's be honest, it's an election year. I think everybody is highly motivated to be as supportive as they can to the not-for-profit and the small business community. So I would continue to soldier on as if there's unlimited funding. How long can we wait? Well, it depends on how you're going to measure economic injury, right? So economic injury is required to be measured. And for many of you, probably the first month that hit you was March. For some of you, maybe it was earlier, like February. So remember what I said about closing the months and getting those financials in order? It's so critical to be able to close March definitively, having done your bank reconciliations, et cetera, because March for most of you is saying, hey, I got it. This is the first month and I was going to be here and I was here. That's how you demonstrate evidence of economic injury. And then Pat, a client explained that they ask for owner's name and contact info. Nonprofits don't have owners, so listed executive and board chair name with 0% ownership. That's fine, Pat. I would recommend whatever you can just so that you have a contact name of who are the key people that are involved in the organization. I recognize the inherent weakness of the forms that they're not one size fits all. You can either put that in the owner's box and just explain it, or you can attach it on a separate sheet of paper just explaining it, all right? Okay, sorry. For those of you going into EIDL for the first time, and again, I use profit and loss. So you need to know your figures for the period February 1st, 2019 to January 31st, 2020. That's the relevant time frame where they're going to ask you what amount of money came into the organization during that rolling 12-month period. And as you know, there's a $10,000 grant waiting at the end of that application. Now, I don't know if it's a Willy Wonka golden ticket or if it's just something quite different quite yet. I don't know of anyone that's received that funding, but I imagine it's a good offer and it will be made available. Okay. When you file your application, the first thing you're doing is just you're providing evidence of eligibility. That's all it is at first. So they want to just get through a very preliminary process to make sure you're eligible. Later, you'll be asked to provide additional supporting documents. And in the prior type of application, these were the ones that were being asked. Tax transcripts, tax returns, and then these specific forms. I can't tell you with perfect certainty what they'll ask for from you, but these are the types of forms that you might want to have ready to go. This is where I'm providing the most value to the people I'm working with, because there's a lot of, there's some tricks and there's some pitfalls in signing these or dating them or not getting them quite right, but there's also some opportunity to provide additional information so people truly understand who your organization is and who you are and why you're asking for this amount of funding and why. And that particularly becomes the case for this Form 1368. Again, I'm calling it the college admissions essay because that's almost kind of what it is, all right? What happens after you submit, you get assigned to a loan processor. They check for all these things, eligibility, completeness. They'll reach out to you to talk to you. Some people got it early. It could be quite a while. As you can imagine, they've been overwhelmed with the response. So when you are available, the way I'm working with people is I'm coaching them on about what they should say on the call. And it's a funny thing. In the application, more is more. On the call, less is more. I always strongly remind you, don't be effusive. Don't go on and on about your mission statement and all the wonderful things you're doing. Just answer their questions very directly because, you know, they don't have a lot of time. They're serving a lot of people. And if your application is complete, then it'll speak for itself, right? And it'll have all the details they need. I always strongly encourage people, don't, because you might get tripped up over your words, right? You might say something like, I'm going to use the money for building that new school when you know that's an ineligible use and you could trip up. So just stick to your script once you're on the call. If you are approved, and I certainly hope that's the case for all of you here, a case manager is assigned, documents are sent out. The only thing I cannot tell you again, because I have not yet seen this, is how the funds get dispersed. On the SBA training calls I was a part of as this program was rolling out, the disbursement was in tranches. If you don't know that term, it just simply means that you get it in segments. So if you're approved for $100,000, maybe 25 now, 25 2 weeks, I just don't know. But as I'll get more intelligence on that. You know, Marianne, one of the things I'm committing to you is that, you know, as major updates that go outside of Treasury.gov and the other are made available, I'll send something to you so you can share it with your community, okay? Mm-hmm. And that's it. So what we accomplished here is we just really kind of gave some basic ideas about PPP and EIDL. I'll just close by saying again and again, I strongly encourage you to stay in and around these websites for all the latest updates, because if they're real, they're going to be posted there. You know, a lot of service providers, a lot of brokers, a lot of consultants, a lot of people are out there to be of service to you and they want to get you the latest and greatest. That's great, but you can go back and check to make sure that it's right. Also, there is a lot of fraud and nefarious people out there trying to take advantage of the unwilling and the unwitting. And what I can tell you is that the way I'm being guided on how I can work with my clients. And one particular easy fraud that people can fall victim to is I am not allowed as a broker or an intermediary or an agent to charge you a percentage of the funding that you receive, right? An example, in normal business, when I'm getting money for people, just like, you know, when you do a real estate transaction, you pay the real estate broker 3%, 4%. Okay, same thing in traditional lending. If I'm doing that work for someone, yeah, I'm gonna get paid as a percentage of the proceeds I get for that company. But in this lending program, no one who's helping you is allowed to charge a percentage of the final fee. All right, there's some very strict guidelines on that. So if you're hearing that in your community, you know, who knows how much things are going to be enforced, but just something to keep as a watch out when you're talking to your clients. What's reasonable and fair, I think, is if someone's helping you, paying them for their time and their value within reason, because, you know, we're all here to help. I've discounted my fees. Probably all of you on this call are not necessarily charging your full fees and you're trying to help in any way you can. And because on the other side, you know, when normal course of business returns, sure, we're back to our market rates. But until that time, you know, we'll all pull together. So again, this is the Treasury thing. There's Treasury.gov. What did you say, Marianne? If there's not a barking dog or a child appearing on screen, it's not an actual complete webinar. I believe you. So anyway, so that's everything I have. How much time do we have? Okay, it's 7:45, so we have some time for some questions. And if you think of questions later, Marianne, if you don't mind receiving them from your community, and then I'll try my best. But I don't want to not answer your questions, but happily, these are the best repositories, and your resources are those two websites. Okay? So any other particular questions or cases about what you're confronting? Oh, and I'm sorry, beyond the websites, again, you want to talk to your banker and keep her or him just very abreast of what you're wanting to do. Follow their guidelines. They may have additional applications. I hate to say it, but follow their rules. That's the best way and the fastest way to making sure you get the funding you want. And something came up in the chat, right? Marianne, can you read what's in the chat? I'm having trouble.
Yeah, hold on. Yeah. Do you see it?
I got it. Oh, thank you. Great info. Thank you, Pat. I appreciate it. It's funny for folks like me who don't have a lot of experience on the lending and banking side for not-for-profits. I think it's exciting to try to be of service in some way. All of us are involved in not-for-profits in a meaningful way. My particular one that I support is called New World Symphony here in Miami Beach, which is it's a master's postdoctoral academy for artists and musicians to learn how to be great contributors to major symphony orchestras all around the world. So that's one of my involvement.
Thank you, Keith. That was an amazing amount of information. I wanted to get any kind of feedback or what's coming through for anybody, like, how this content served you. And if you have any additional questions, yeah, go ahead.
Can I answer Raphael?
Mm-hmm.
Raphael, he says, on March, my revenue is higher than last year due to a late invoice payment. I don't see cash flow coming in the next months. Okay, so this program was absolutely made for you in mind, and it's really quite critical. And am I eligible? Yes, you are absolutely eligible because you're demonstrating economic injury, right? Economic injury can be defined as what happened that you can record so far. So say for most of you, February and March. In your case, Raphael, you have this one-off, which is just a one-off event because you got a late invoice payment. That money probably should have come to you in last year, right? So you can demonstrate that that's just unique. But remember at the top, or at some point here, I shared with you that the economic injury time frame is April 1st, just now, 2020, all the way to March 31st, 2021. So economic injury is not only what you've experienced, it's what you expect to experience, which is why I'm encouraging you to do that before and after scenario. Okay, Christine, thank you. Our banker said that they only deal with a single owner SBA lending, and since nonprofits are not, we're pushing them off. Since we have a relationship, they are going to work with us. Just checking on this response. So Christine, again, just to be clear, since you do have a relationship, they are going to work with you versus they only do a single owner SBA lending, and it's not personal. Yeah, it's a funny thing because the SBA and the Treasury Department set guidelines. It is up to the individual bankers to determine how they're going to execute this and prioritize it. Hopefully you will still get pushed through and be a priority there.
Okay.
Raphael, thank you very much. I'm proud to be of service. Joelio. So that's cool.
So, Keith, I wanted to bring up something because like Pat and like we can all attest to, so much of the nonprofit income is made the last quarter of the year, right?
Because that's when donations, yeah. Mm-hmm.
Yeah, that's when the donations are. Then Pat can probably give me a very a data point on that, but I know it's probably more than half, almost 75% of revenue comes in at the back half of the year. So for me, it's like I think it's like figuring out, like you don't know what's really going to happen, what you anticipate this happening. I don't know, Pat, can you talk about that a little, or is that something
Yeah,
that's on your mind?
I think I don't generalize. I think depends upon how the organization raises their money, whether it comes in that last quarter or if it's throughout the course of the year. Certainly doesn't come in the first quarter. We know that. Okay, so the March through June is a critical quarter for organizations. But I think the concern that you're talking about would be the impetus for round 2, round 3, round 4 of funding. I'm lost with what the Congress is talking about when Pelosi says we need a 4th round, and I'm like, isn't this the first? I'm confused. But because with the unemployment rate at 7 million, 10 million people, whatever the number is today, those people are not all going to go back to work immediately when the economy opens back up. And it's that downstream, they're just not. They may not recover during this calendar year. And that's going to impact funding for the balance of the year for organizations.
Yeah, and Pat, your illustration and your examples are the perfect reason why the SBA training suggests go forward 12 months, right? Disruption here is going to be 12 months, whether we like it or not. Again, I'm not a soothsayer. I don't have a crystal ball, but any types of pandemics or major issues like this, this is wave 1, right? And then we have a big country, so wave 1 is still not happened in many parts of the country. New York City is going to be on wave 2 before others may even start wave 1. So it's going to be a long-term event just because of the nature of the contagion and the spread. So, some articles say it's an 18-month disruption period, but at least for now, having cash, in traditional for-profit industries, we talk about cash flow projections over the next 12 months. So if that's the term you use, or if you use something different, that's why it's so important to get in touch with those numbers and be as predictive as you can.
I don't think that organizations are going to have a hard time getting in touch with those numbers. I mean, they know what their income was last year. They know, they've got it all cash flowed out. They know when it came in and where it came from.
Yeah.
I think the bigger concern is that nonprofits don't typically take loans. Okay, and the only piece of the EIDL that looks like it's forgivable is 10 grand. So then you're rolling into you are rolling into a loan. And
correct.
If an organization is concerned about sustainability over a year or 18 months, and then to take a loan on top of that, not to get a grant, puts them in a very, very scary, precarious mode. I'm not saying it's not the same for-profit. I'm just saying not-for-profits typically don't extend themselves that financially out in the wind without something covering their tush. The other piece about this PPP, it's only for April through June. So if that gets replenished, I think nonprofits will be more interested in that funding mechanism for June through, June, July, August, June through August, and then, September through December. If there's waves of PPP money that become available, because that's forgivable if those folks stay on the payroll for 8 weeks after reactivation.
Yeah, Pat, an interesting thing is if you look at the most recent iteration of the application, one kind of fun thing, look in the top right corner and you'll see that form now expires September 30th. The first iteration expired June 30th.
Okay.
Wow.
So I think this is already thought through of probably being an additional 3-month extension. But I also wanted to share with you, I'm very sensitive like you are to anybody taking on a loan commitment, but I can give you a hard number to consider. If any of your organizations took out a $100,000 loan as a result of the EIDL program, and the interest rate is 3.75%. Again, the lowest interest rate ever offered. It's 50 basis points above prime. The monthly payment on a 30-year term is $463.12. So, essentially that's a cash outflow of $5,557.39. So, depending upon the size of the organization, if $5,500 and something dollars a year is something they can handle for loan payments based on historical earnings and where you think they can bounce back up to, then again, something to consider.
I hear you.
Yeah. I just want to make sure that, because that loan term is 30 years out, traditional lending for me, if it's a working capital purpose, is a 10-year term. So yeah, if that were a 10-year loan, the time frame would be very compressed, and the monthly payment would be closer to $1,500 a month. So
some of these organizations haven't even been in existence for 30 years.
That's right.
So for them, it's all relative. It's not like a 30-year mortgage that people used to get. But
Yeah.
it's all relative.
Yeah.
Our whole job is to work ourselves out of business right now. You know what I'm saying? And to solve a problem, Pat. You know what I mean? That's a big, 30 years is a long time to say, I'm still going to be, dealing with this societal issue. And Melissa had a great point. And then we had another question. Melissa said, and we don't fundraise for debt relief. To Pat's point, it's the same thing. So this is a different kind of position, and also these are extraordinary circumstances. So
that's
people
right.
can decide what's right for them. But then we do have a question from Bushra, and Bushra, I hope I'm saying that. I have a client who just formed in February who just formed in February 990. They haven't closed 2019 yet and haven't filed the 990. Is there any way they can apply for assistance?
Bushra, if formed in what year? I just need to know
February 2019. So they just formed a little, and so they haven't filed anything yet because they're just a year old.
Okay. The answer is yes, they're eligible to apply. Entities are eligible to apply actually if they even started up as early as January this year. They are eligible. However, in order to get any lending, we must have some type of figures from 2019 to share with someone. It doesn't have to be closed from an accounting perspective, like filing your 990, but at least it has to be the internals have to be prepared.
Okay, and then Christine has one more question, and then we're going to wrap it up. How does increased expenses play into we are consistently talking about loss of revenue, right? We have expenses transitioning to telehealth and expect increased expenses for client assistance funds. So
okay.
They run a counseling center, so now they're doing everything to set that up, and now they feel like more of their clients are going to be in need of assistance that they would typically provide. Yeah.
Christine, what I would tell you is remember, a good thing to remember is what the use of proceeds are for, right? So in the PPP world, your use of proceeds is salary, rent, utilities, and interest, right?
Okay.
Full stop. In the EID world, it's all of those plus anything that would be considered a fixed expense.
Okay.
So a fixed expense might be something like, hey, they have a software they've always been doing. And also accounts payable can be a part of that as well.
Okay.
All right. So EIDL covers a broader list. But again, I think your question illustrates a lot of things. Is what we were in 2019 is not necessarily where we are right now. And so I'm encouraging all of you, when either for yourselves or the organizations you work with, is have 5 quarters together, have all of 2019 and the first quarter of 2020, so that if you have exceptions or if your reality has changed in a very material way, you can have that discussion with either the SBA loan processor or the banker that you're working with.
Okay. Thank you.
Yeah.
All right, Keith, I want to say
Bushra, thank you.
so much.
Thanks, everyone.
all the questions. And Keith is
Stop.
like the busiest person on the planet right now.
Mm.
And I am so grateful that
Marianne, she's muted.
Marianne, you're muted.
thank you. Sorry, I got a lot going on behind me here. So I just want to say thank you to Keith for
My
spending this
pleasure,
time
everyone.
with us. He's really busy, and he knows so much, and he has a very, as you can see, a very way of talking about these complicated issues that make it easy to understand. So I'm so glad that you could be here to help everybody. And if you have any more questions or anything, you can reach out to me, and I'll make sure we'll put you in contact. And you have his email.
Thanks, everyone.
Thanks all. Be
Thank
safe.
you. Appreciate it.
Okay, take care, everybody.
Bye.
Bye-bye.
You too.